When the ADX, average directional index indicator, is combined with the Bollinger Band's width indicator, the resulting combination helps identify areas of low activity, usually when ADX initially drops below 20 and Bollinger Band's width goes under 30. Then it's preferable these two indicators have the same approximate movement with a slight decline or plateau similar to what happened at these areas. This is contrasted with more directional movement. In this case, the more significant portion of the downtrend continuation gets underway when Bollinger Band's width goes back over the lower threshold of 30 and ADX goes back over its common lower threshold of about 20. Then usually when Bollinger Band's width is over 50 and ADX crosses over 30, such values representing high volatility and directional movement can normally only be maintained for a short time and tends to mark the beginning of a new phase on the chart. In this case, it's quite a significant shift. The relatively high indicator values coincide with the beginning of a major halt to the long-term downtrend and a move towards relatively range-bound trading. Now Bollinger Band's width goes back under 30. We narrow down our time range of interest to when ADX crosses under 20 to highlight what is actually relatively insignificant movement in the broader context. It may appear quite eventful in the short term, especially when there's a slight incline with the indicators towards November, when these relatively sharp drops increased volatility. That was still relatively insignificant in the grand scheme of things, especially with the Bollinger Band's width indicator remaining under 30, along with ADX remaining firmly under 20 in the following weeks. Then more recently, there's been highly directional movement and greater volatility in a bullish context this time. Both these indicators go back over 30, which means they're at moderately high values. So it's no surprise they can't be maintained for a long time. The resulting decrease in volatility and directional movement indicates a major delay to an initially strong uptrend. Now something interesting and not that common happens here. Bollinger Band's width briefly peaks over 70 before steadily declining, which is quite natural. However, ADX continues to go up and in fact goes well over 50. This divergence indicates volatility is declining, but directional movement, in this case upward movement, continues. The result is the familiar slowdown of the trend, but with a neutral to bullish posture instead of the more normal neutral to bearish posture. And this becomes much more noticeable when both indicators are on a decline back to their lower thresholds.